So let's wait and see as people join us.
Just say go, Roger, when it's time.
All right, we are live, and we have 10 people that have joined us so far. If you guys can hear me on the go to webinar control panel, would you mind if you could raise your hand if you can hear the sound of my voice? On the go to webinar control panel. There we go. People are raising their hands. That's good.
Awesome.
That's a good sign. All right. Why don't we give it a minute and then we'll start. All right. Well, it's 2 minutes after. So why don't we go ahead and start, Roger?
Very good. Good afternoon, everyone. I'd like to welcome you here to Key Point Credit Union's webinar, Buying a Home in Times Like This. My name is Roger Alvarado. I'm the Director of Sales for Real Estate Lending here at the Credit Union. And I also like to introduce to you Michael Devlin. He's one of the best brokers in the Bay Area. He is a broker partner, principal at Success Realty here in the South Bay. And he'll be speaking here in just a couple minutes. I'm just going to go for the slides and we're going to jump right in. Here's the agenda.
Roger, one question. Why don't you confirm that everybody can hear your voice too?
Oh, great. Can everyone hear my voice? Just if you can confirm that.
Raise your hand. There we go. They're raising. Good to go. Go for it.
Excellent. Okay. Well, let's go forward. Here's the agenda. One of the first bullet points we'll be talking about is, can I buy or sell during the pandemic? I'll discuss a little bit about getting how to get pre-approved, the pre-approval process, analyzing your financial history, picking a loan that best suits you, and of course, down payment. So let's get started. Kind of webinar instructions, a little housekeeping before we get started. If you can keep your phones muted during the presentation, that would be great. That way we can avoid any background noise. And then what we're going to do is we're going to have a Q&A after Michael ends his presentation. So away we go. Okay, can I buy or sell a home during the coronavirus pandemic? Well, the answer is absolutely yes. There are some changes, however. So a lot of the bigger banks, a lot of for example, Bank of America, Chase, Wells Fargo, they've all have stricter credit requirements, as well as credit unions as well. Back in the day, you were able to put 3%, 5%, 10% down. Most of the bigger banks have gone to only 20% down. And you must have a FICO score of 700. So that's one of the biggest differences, one of the biggest changes. As far as having home opens that we're all used to on the weekends, those have changed as well. A lot of realtors, a lot of sellers are switching to the virtual home opens. They still stage the homes with nice furniture and flowers and things like that, but they've gone the video. They're using a lot more of drones and a lot more technology. If there are sellers that allow people to enter their homes, obviously they don't want 20, 30, 40, 50, 60 people in the room at a time. But if they do allow people, it's typically by appointment only. It's maybe 1 or 2 people that are allowed in the house to view the home when it's for sale. And when that happens, they will require typically the masks, gloves, and shoe coverings. So that's one of the biggest changes. Appraisals, very important. So as lenders, we send out appraisers to see what the house is worth. They do interior and exterior inspections. And obviously in these days, the interior part is a little more challenging. So some of the lenders, the investors, Fannie Mae and Freddie Mac, have allowed in many situations to have what's called a drive-by appraisal, where the appraiser just goes and still gets his comps from other homes, but the seller and or the listing agent would take pictures or interior pictures of all the rooms. So that's another big change here in the industry. Then there's inspectors. Obviously, when you purchase a home, you want to have it inspected, unless, of course, it's a new home when you know everything's new. But you typically with on resale homes, you want to have an inspector. Again, those are very challenging as well. I mean, obviously, he or she can do the exterior. The interior is going to be a little challenging, but they are able to do it. So that's good. Most lenders nowadays, especially for us, like us here at Key Point, we are paperless. So, and that's great because you're able to upload your documents and any sensitive information via a secure email that we have through our portal, which is great. What we did is we asked, the real estate community, have you had a transaction fall out of escrow due to the coronavirus? And what's interesting, 1 in 4 members here at the credit union indicated, at least through the months of March and April, that no. I mean, about 70% said no. I mean, due to the coronavirus, they haven't fallen out of escrow, which is interesting, which is great, which is good for us and good for you. In general, are home buyers expecting lower prices? Yes, because of the situation, because of the global situation. A lot of buyers nowadays think that because how the market is and the economy, that houses are going to be lower priced. Well, that isn't necessarily the case. As you can see in this next slide, sellers aren't necessarily on the same page, especially here in the Bay Area. Inventory is low, and so that's what that's doing, is that's driving up prices. Sellers are holding firm and showing that when they are listing their homes for sale, that they want the higher price. So that's a gap that has to be crossed. So how are you, the buyer, able to compete with other people that are putting offers on homes? Well, that's simple. You have to get pre-approved. Now, this is very, very important. There's 2 kinds. There's a pre-qualification and then there's a pre-approval. Pre-qualification is just that. It's very initial. Perhaps you may fill out an application online, give general information, how much you make, how much you saved up, down payment, etc. And that's okay. That isn't necessarily very strong when you're going out to look at property. What I highly recommend is to get pre-approved. This is a more formal process that requires you to complete a detailed mortgage application and submit supporting documents. Now, the pre-approval process is very straightforward. All lenders, whether you're with Key Point or Bank of America or Chase or Wells Fargo, all lenders will analyze and evaluate your history to determine the loan amount you're qualified for. And what they look for are things like W-2s, pay stubs, bank statements, things like that. Once all those documents are looked at and reviewed and signed off, and you're approved, you'll be given what's called a pre-approval letter. Now, this is very, very important. This letter indicates to the seller and the listing agent that you're serious, that you're very serious. So this puts you in a stronger position when you're making your offer. Because if you've heard, you've probably heard that on any given subject property, there's going to be multiple people putting in their offer. So you want to make your offer as strong as possible. So having a pre-approval letter from your lender almost guarantees that. As they analyze your financial history, they're going to look at your credit. Credit's one of the most important factors when applying for a loan. The higher your score, the less risk you are to either Key Point or any other lender. Some of the things that impact your score are credit mix. For example, typically, went back a little bit. Typically, you want, when you're purchasing a home or applying for a home loan, you want to have 3 lines of credit. And that could be a good mix. You want perhaps credit cards, maybe a car payment, maybe student loans. If you have student loans, that's pretty important too. Make sure you make your payments on that. But yeah, that's a great way to develop credit history. Length of credit history is also important. For example, if you have an old credit card from, say, Macy's or Best Buy or one of the other retailers, and you've had it for years, say 10, 15 years, you want to keep that open. And it's say, for example, if it's a zero balance and you're thinking of canceling it, think twice. The longer you have credit is better. So think twice before you cancel that credit card. What it shows to the bank and or to Fair Isaac, the longer you have your credit, what it indicates is that you as an individual know how to manage your credit over a long period of time. And then there's payment history. Of course, make your payments on time. That's a given. And then lastly, it's the amount owed. Here in the industry, we call it the rule of 30. 30%, you don't ever want to charge more than 30% of whatever your credit limit is. For example, if you have a credit card that's $1,000, you don't want to go over 300. You want to keep it below that. Typically, best, you want to pay it off every month. But if you can't, keep it below 30% month over month. And that's great. Again, you want to prove that you're able to manage your credit over a period of time, manage your credit appropriately. And then there's employment. All lenders look at the employment. 2 years work history in the same field of trade is very, very important. Employment must be stable. There are some exceptions to the rule. For example, if someone goes out on maternity leave and then comes back, that's all. That can be an exception. If, for example, you're a college grad and you've only started working for a specific company for a year, if it's in the same field as your college degree, we can also look at that as well. Any lender will look at that. So that's that. And there's income. Income should be stable or increasing. The decline is a red flag. So as time goes on, the longer you are at a job, say 2, 3, 5, 10 years, that's great. Same job, or if you're getting promoted and your income's increasing, that's good. They're going to ask for, any lender's going to ask for pay stubs for 30 days, the last 2 years of W-2, and perhaps tax returns. If you're self-employed, definitely going to be tax returns. And assets. You need to document sufficient assets. Typically, it's 2 months bank statements from all your accounts. So if you had checking, savings, 401k, if, say, for example, you have stocks, definitely you want statements. If it's quarterly statement, then just the quarterly statement will suffice. Down payment. You definitely want to consider down payment. Nowadays, as I mentioned earlier, it's 20% down. One of the advantages with going Key Point, we still offer the 3%, the 5%, and the 10% down, which is great. So if you're a member with us, definitely look into that. Closing costs are going to be typically anywhere between 1% to 2% of the loan, and reserves after your down payment, after the closing costs, any lender, including us, is going to see how much you have left. The reserves are going to be pretty important. If your loan amount is less than $1 million, typically we're going to be looking at 6 months reserves. If it's greater than that, typically it's going to be 12 months reserves. And document list, as I indicated before, pay stubs for 30 days, W-2s for 2 years, tax returns for 2 years, and bank statements from all accounts. So picking a loan that's best for you. There's a lot of different loans out there. 2 basic types are the fixed rate and the adjustable. The fixed rate typically are terms of 15-year, 20-year, and 30-year. Those are the most common ones. And they're pretty straightforward. They're fixed. Once you lock in, and that's your interest rate for the entire length of the loan for 15, 20, or 30. I believe on the jumbos today, they're about 3.25%, plus or minus. Now, adjustable rate mortgage, a little different. Typically, I'll give you an example, the 5-1 ARM. It's one of the most popular adjustable rate mortgages out there in the marketplace. These are really good loans if you know how long you're going to be in the property. For example, if there's people out there that are relocating and say you're going to be at the property for maybe 3, 4, 5 years, the 5-1 ARM would suit you best. Reason being, the initial 5 years, the start rate is initially lower than your typical 15 or 30-year loan, which is great. But you have to be really careful. Once it gets to after the 5 years, it then will adjust. Depending on which lender you go with, it'll adjust either every 6 months or a year, and typically it will go up. So you want to make a decision before the term is up. So there's 5-1 ARMs, and then there's also 7-1 ARMs. So again, if you know you're going to be at the property for a certain period of time, these work well. If it's going to be a short period. If you know you're going to be there for a long time, and you're going to have kids and just have roots, then the longer term, the fixed rates, the 15, 20, 30 years will suit you better. Down payment, as I indicated before, here at Key Point Credit Union, we have the 3% down payment, the 5% down payment, and the 10% down payment available to you. If you have, anytime you have less than 20% down for a loan or to purchase a house, you're going to need what's called mortgage insurance. Mortgage insurance is a lot of people try to shy away from mortgage insurance. I'll give you a quick story. Many years ago, when I bought my first property, I didn't have 20% down. I had 20 or 10% down, which meant that my payment consisted of principal, interest, taxes, insurance, and mortgage insurance. Well, as time went on, I was making my payment every single month with the mortgage insurance, and a few years went by, about 2.5, almost 3 years went by, and I thought to myself, I'm paying down the principal every single month. And I thought, you know, I think I've got 20% equity built up now. But a funny thing happened. As I'm paying my principal down, appreciation started to happen, which means the value of my property started going up. So the combination of the two helped me a lot. So what I did is I called my lender and I said, yeah, I think I have 20% equity now that I've built up. Is there a way we can remove the mortgage insurance? So they referred me to the mortgage insurance company. I called them. I petitioned and they said, sure. So they sent an appraiser out to my home, did the inspection, interior, exterior, and lo and behold, I had 23% equity. At that point, the mortgage insurance fell off, which was great. So now my payment went from here to here, which was great. So the reason I tell that story is you shouldn't shy away from mortgage insurance just because you don't have 20% down, especially here in the Bay Area, that could be a lot of money. So mortgage insurance, think of it this way. Think of it as a vehicle to help you purchase the home of your dreams. I did. Gift funds. Gift funds are also allowed, regardless of whatever lender you go with. Gift funds are always allowed from a family member. And then we have what's called the Realtor Circle. A lot of credit unions, several credit unions, are adopting this. What they're doing is they're partnering with local real estate agents, brokers, people with experience, people who know the area. And what they're doing is they're matching the home buyer, our home buyers, our members up with these agents. These agents have agreed to give up 20% of their commissions, whether you're buying or selling a property, which is great. That means that's more money for you. You can use the 20% of their commission and you can buy down your rate, or you can use that for closing costs. So that's huge. And as you're a seller, same thing. When you're selling the property, if you have one of the agents that we work with or partner with, you can use them. They'll give you 20% back, and that can help pay for your closing costs. This is huge. In addition, if you're buying, you get the 20% and you get an additional $1,000 from Key Point to help pay for your closing costs or buy down your rate. So it's a win-win situation. It looks like my time's almost up. At this point, what I like to do is introduce to you Michael Devlin from Success Realty, and he's a wealth of information. As I indicated, we're going to answer all the questions at the end of the webinar. Mike, take it away.
All right, thank you, Roger. That was great. So let me see, my screen you should be able to see it. Oops, get back to the beginning. All right, so we're going to talk about buying a home virtually or otherwise. And there are 3 phases when we're looking at, what's going on in the market. There's what's going on right now, right? During shelter in place, what can you do? Then there's the period just after the shelter in place, when that is lifted. And then finally, there's going to be long-term effects, perhaps, and maybe even a changed reality about the home buying process. See if I can get this to work. Right. One thing to start with is I looked at April for Santa Clara County for April of 2020 compared to April of 2019. And that's just the beginning of when the effects from COVID-19 were showing up in the market. And you can see the sales of single family homes in our county in April were down 36%. But what's interesting is that prices did not go down. Certainly not for single family homes. They actually are, the median price April of this year versus last year is 5% higher than it was. It went down slightly for townhomes and condominiums. So right now we're seeing a drop in the number of properties for sale, the drop in the number of sales, but not certainly with single family homes yet, a drop in what the median or average price is. So overall, what is the impact going to be? Well, home sales are going to slow while we're in the first couple of phases. But if Silicon Valley sellers are holding off, and there's evidence that they are holding off, the demand for buyers may still continue. I'm closing a transaction today that went through in the COVID-19 era. I've got a listing that we put on the market during COVID-19. People are showing it. We're still closing some transactions, but sellers are backing off a little bit because they're waiting for the shelter in place and the things to recover. But then they may be more properties on the market in a while. Hopefully that'll come soon. We're doing more of our meetings by Zoom or Google Meet or Skype or one of the other programs in order to, meet with the people that are thinking about buying, explain their options, go through properties that are for sale. So there's evidence that the rebound, right? And they talk about the market is going down. That's undeniable. Is it going to go up? And when does it start to go up? And one of the things that we look at is how many people are going to Zillow and running searches. And as soon as the pandemic really hit, it dropped significantly by almost 20%. However, as of April 15th, it's starting to go up again, where it's now actually up where it was year over year, which might suggest that people who were put off from buying for a while and selling for a while might be changing their minds as, the economy might be going to improve. An economist with House forecast that it's going to cause a sharp, noticeable sharp drop in the spring, but I've seen many predictions that there could be a rebound in the summer or certainly by the fall. There might be another dip in the fall if there is, in fact, another resurgence of the virus. However, the forecast is that sales are going to be down 35 to 45%. However, prices are not destined to go down by that same amount. That economist estimate is 1 to 2.5% is how much that we could expect a drop in prices. The home sales are dropping in shelter-in-place orders, but the prices are largely unaffected. In fact, one of the models that is looking at a 12-month forecast, the percent year over year for the San Jose, Sunnyvale, Santa Clara metropolitan area forecasts a 1.4 drop in the median price between March of this year and March of next year. Realtor.com, which has their own economists, are also predicting that there's going to be a drop in sales. Their prediction is 15%, and that home prices are going to flatten, maybe declines of 1.1, which is consistent with what we're projecting perhaps in the Silicon Valley. Zillow has their own forecast. They have their own economists as well. They're estimating a 3% drop, and they have different models depending on optimistic, the most likely, or the pessimistic model, but they're projecting a drop in sales, but perhaps only a 3% drop. And this is a nationwide figure. In one survey that was done with sellers, 77% of them are waiting for the shelter in place and other things to be over before they put their home in the market. In other words, as the NAR chief economist said, home sellers are gearing up to list their properties with the reopening of the economy. Plenty of buyers also appear ready to take advantage of low mortgage rates. One of the things that we've seen in the last week or so is that there's been an increase in applications for purchase loans. More people, it's starting to come back. 5 indicators that are going to show when the housing market is rebounding. One would be a flattened curve. You've heard about that in terms of the number of infections and death. The end of stay-at-home orders, right, is going to be necessary for the market to really take off again. The 10-year yield goes above 1%. It's a longer explanation as to why that's important. Right now, I believe it's about 0.7. In credit stress and jobless claims, there's some of the lenders, because of the forbearance, are having to put off a lot of income, and so there's an effect on the stress on the credit. And some of the hardest hit sectors will need to start trending, like the restaurant and some of the others, when that's what the economists are looking to see as we're leaving and the housing market is rebounding. Right now, we're dealing with shelter in place, which means that under the rules for Santa Clara County, and this is pretty much true for the Bay Area, San Mateo, Alameda, Santa Clara, Contra Costa, San Francisco generally have very similar rules. Showings of homes are supposed to be virtual if at all possible. Anything that we could do virtually or electronically, we're supposed to do rather than in person. And the rules for showing a home recently, like on May 4th, they changed the rules to allow the showing of an occupied home. Up until May 4th, we were only allowed to physically show homes that were vacant. And so that was changed on May 4th, and we can show property that's owner occupied, but there are some things we're supposed to go through. Only one agent can be present, only two people from the same household can be there as the buyers, and there's a form called a PEAD form, which I'm going to explain what that means, that you have to show before you're showing the houses. Open houses, in the sense of people coming to the house, are not allowed under any circumstances. I held a virtual open house last Saturday, and I have one coming up this Saturday where it's all going to be done through, a virtual meeting. This is the protocols that have been issued by OSHA, the Occupational Health and Safety Administration, specifically for the real estate industry. And this came out on May 7th. And this is the suggested protocols for showing property in the cleaning. Notice it says you should be cleaning and disinfect before and after each showing. Their windows and doors should be open so there's fresh air. Wiping down and disinfecting items that it would be touched. One of the things that I tell my clients to do when inspectors or buyers are coming to look at the property is to leave open all the inside doors and turn on all of the lights so that they don't have to flick switches and open doors. There needs to be time in between to do the cleaning. Some agents only allow the property to be shown once every 24 hours, so there's time to get in and clean. There should be hand sanitizing products. People should be wearing masks and using hand sanitizer, washing their hands. You probably heard of all this before. And that's what should be done in between each cleaning. Now, this is just a segment from an addendum that has been created by the Association of Realtors that is used when a seller puts their home on the market. And the reason that I wanted to show you this is because this gives you an idea of the instructions that the seller is getting. And notice there's a reference here to this PEAD form, which is a property entry advisory and declaration. And what this is asking for is that before a property is shown, that we want the buyer and the buyer's agent to provide the seller with a copy of this form. I'll show you what the form says. But notice B and C here, which are boxes that can be checked. The first one is that they provide verification that they are financially able to purchase the property. So, and that they have viewed the property online. So on my listing, I say to the agents that if you're going to show the property, I assume that you've been pre-approved by a lender and you have a copy of that pre-approval lender letter. Number two, and included in that would be proof that you have the funds to close. Number two, a signed form saying that you've done all the steps necessary in order to go and look at the property. And I want them to sign off that they've read the inspections and the reports and watched the virtual tours, which include the drone flying around and all of that, just so that they know in advance whether or not they really want to see the property. As you can see from the previous slide, it's sort of a hassle, right, between actual physical showings, if that's, there's sort of a hassle. Move on to the next one. So this PEAD form, if you're going to look at the property, and a lot of this I know is probably stuff you've already heard, but if you're going to look at the property, it's basically telling you that you should use care right? That you should follow any doctor's recommendations. Are you an at-risk person? You should be washing your hands with soap and water. You should be practicing social distancing, and you should discard your gloves and masks and everything after the showing. Those are the instructions that are given to people that are going to go look at the house. Now, if you're back here, there are certain instructions that they give to everyone, which is they ask part of this disclaimer, this declaration is, do you have any symptoms? Have you been around people with symptoms? Do you know that people may not be exhibiting symptoms? And if you find out that you have any symptoms, you're going to let us know as soon as possible. So they've also, because of the coronavirus, they've made changes in the way the purchase contract is used. In addition to all of the normal stuff, there's now a coronavirus addendum or amendment and another form called the Notice of Unforeseen Coronavirus Circumstance. And so what this addendum basically says is that if during the real estate transaction an issue arises that is a cause directly of the COVID-19 virus, that the parties agree that they will modify the time periods for doing stuff like removing contingencies and things like that, or closing escrow as a result of that, or allow the cancellation of the contract. And then there's also, as I mentioned, the PEAD form, which I've already gone through explaining what that actually says. So is it possible to buy a home virtually? The answer is yes. There are people that are doing that right now. So using Zoom or Skype or Google Meet or whatever your favorite is, Microsoft Teams, we have them all. We would do a virtual consultation, figuring out what you're looking for, what kind of properties you're interested in. Then we're going to help you find the properties. Now, you just need to understand that if a typical buyer has got Redfin and Zillow on their phone, and then they would be finding homes and going to open houses and then telling their agent, that system is broken down because you can't just go to the open houses. Plus, some of the better deals, the good deals, the best investments are not found on Zillow and Redfin. They're not in the multiple listing service. So one of the things we do with buyers is we also identify properties that are off market, not in the multiple listing service, that for a variety of different reasons might be for sale, and we'll reach out to find properties like that so you're not competing with other buyers. A virtual tour, if the agents don't have it, we'll go and film one as we walk through the property so that you can get as good of an idea about the property before you actually have to make the effort to go there. All of our forms are signed electronically now. No more paper and pen and things like that. It's all done electronically. You get a PDF. You can wire your earnest money deposit into escrow. You don't actually go there and give them a check if you want. And home inspections, homes are being inspected. I've got right now people that have inspected homes, and we've done some gardening work on them. There's a lot of that that's considered essential services and is allowed. But if it's even possible for you to make an offer to buy a home subject to your personal inspection of the home. So if you're like, well, I don't want to go right now, I want to wait until, a couple of weeks, and maybe, you can, and this is done in multifamily residential most of the time, where you don't actually go into the house until you've made an offer. And the offer is subject to your inspection. And then if you want to have your own inspectors and you have a contractor buddy you want to have look at it and you want to see it, we can arrange for that all on one day, which makes it a lot easier than everybody going it at different times. I've had buyers sign off yesterday and a seller sign off on Monday. Neither of them left their house. A mobile notary came to where they were and closed the transaction. And so those are the steps involved in the virtual. It's also possible, as I mentioned, to actually see the homes if we follow all those different rules. And then that's information about me. If you're interested in a consultation to figure out how to get the best deal possible when you're buying a home in a market like we're in right now, reach out to me. We can do a virtual meeting. So I'm going to open it up now for questions. If you guys have questions for Roger or me, you can start typing them in the question box, or if you wish, you can download copies of the presentations from the handouts menu. So don't everybody ask a question at one time. So far, that's not happening. I'm not seeing any questions. Maybe we were too good. Yeah. Well, I'm not seeing any questions. So what I'm assuming that we did oh, wait a second, I see one. Do you recommend home warranties? It doesn't sound like there's going to be a drop in prices. Anne is asked about the home warranties. The answer is yes.
Yes.
A home warranty policy would cost about $500. Depending upon the amount of competition for the property, we would generally ask the seller to pay for it. It would be good to get an upgrade to the policy for example, if you have air conditioning, to get that covered. And the way, for those of you who don't understand, the way the home warranty works is that if something breaks, like the dishwasher, the heater, the air conditioner, things that are covered by the home warranty, then for a service fee of like $50, they'll come out and fix it. But you definitely ought to have one, just sort of as a safety net. And then there's, Matthew is asking whether or not prices as a result of the projections are a slight drop in the prices. And what it's all going to depend on is when shelter in place is over, are we still going to have more people that want to live in Silicon Valley than we have homes for people to live in? And if that demand is still there, given the supply that we've had, then prices will remain, the same, or they may even eventually go up. But right now we're projecting a small decrease in the next year or so. What if a seller is a patient of COVID but is not aware of it yet? Yeah, well, that's part of what these disclaimers say. And it says in great big letters in the forms that you're assuming a risk, right? Because just because the seller went through all of those suggestions from CalOSHA about cleaning the property before and cleaning the property afterwards, and we don't know if they are asymptomatic, but we don't know that. So when you go there is a risk, right? But there's a risk to go to the grocery store, to Costco as well, I guess. You just have to decide, is this worth the risk? Let's see, other questions. I'll let you know. Can you, if I get one that's a loan one, is it feasible to see houses yet? Answer is yes. I've had people show my listing in the last week, last few days. Are buyers writing letters to sellers why they want to purchase their homes to get the purchase? Yes, we call those love letters. And especially if there is a competitive situation between multiple buyers, and everybody is offering roughly the same price, the seller may have they may like the fact that you want to start a family and raise children there in the house that they had a family and raise children, and they may like that better than the fact that you're an investor, you're going to fix and flip it. Let me see. I don't know if you can see any of these questions, Roger, but I have a lot of potential buyers who have had a modest or severe drop. This is from an agent, I believe. Do you expect a decrease in the number of qualified buyers to depress demand and therefore prices? Are lenders going to adjust? Can you see, Roger, any of these questions?
No, I can't.
So I don't know how to fix that right now. If I change, but basically there's a question here about a lot of potential buyers have had a modest or severe drop in income. Do you expect a decrease in the number of qualified buyers to depress demand? Are lenders going to adjust the criteria because of income instability due to recent events? What are lenders doing, Roger, about qualification criteria? I know they made it stricter, but are they loosening it up?
Yeah, no, they've recently become stricter, as I indicated before. I mean, nowadays, especially with the bigger banks, you're looking at 20% down. Some of the credit unions, like us, Key Point, we still have 3%, 5%, 10% down, but I would venture to guess that no. I mean, especially through the summertime. As far as a decrease in the number of applicants, no. I mean, there's still people looking to purchase. They just, here in the Bay Area, as you well know, it's the inventory is low, so there's a lot of competition. So, but there's a lot of qualified buyers. There's a lot of qualified buyers. I mean, I can speak to that here at Key Point, and speaking to my counterparts in other institutions. There's a lot of qualified buyers, which is good.
Yeah. And I'm seeing that as an agent, that there's still quite an interest. So our price is going to drop by fall. Misha, I don't know. I've heard both ways. Right now, prices are not dropping, particularly in Silicon Valley. Whether or not prices are going to drop is going to be determined by how many of these sellers that are not selling because of the shelter in place and the COVID-19 are going to put their homes on the market. If there's a increase in the inventory once shelter in place is over, and then that would make prices perhaps able to fall. Right. But if we don't get a big jump in the inventory by the end of summer, then we may have still more buyers than we have sellers. Right now, if you're interested in buying, you can make a better deal because there's just not as much demand. But prices might actually go up. Do we see multi-generational buyers? So, Roger, do you see people asking to qualify for a family, parents and children together?
Yeah, it's funny. It's recently there's been an uptick on that. Co-borrowers, people co-signing, things like that. So non-occupant co-borrowers. So parents signing for their children. Yes, definitely. And so that we've been seeing an uptick also in gift funds for their children. Maybe they're just starting out, recent college graduates, or they're just looking to start a family. And like I said, I gave my story. I didn't have the 10%. Maybe they're given the other 10% to help them so they can avoid mortgage insurance and help them buy a home. But yeah, there has been an uptick in that. And yeah, that's lenders look at that. That's not something to shy away from, certainly. So if you have family members that are willing to give funds and maybe co-sign with you, that's a great vehicle. I would use that, absolutely.
All right. Those are all the questions we've had so far.
Awesome.
So the purpose of what we're doing today, and thank you, Ann, and everybody for being here, is to give you enough information for you to figure out if you want more information. And if you'd like to know more about the lending side, please reach out to Roger. If you would like to talk about what your options really are in terms of buying a home in this market and ways in which you can get a better deal, reach out to me and we'll set up an appointment. And I'm going to be calling it an end to the session then. Thank you very much for participating. Reach out to us if you have any questions. Do you have anything you want to say, Roger, at the end?
No, not at all. Thank you very much for attending, ladies and gentlemen. Much appreciated. Again, if you have any questions, feel free to reach out. I believe my contact information is here in one of the handouts. And yeah, looking forward to helping you out, or your friends. Thank you.
Have a good day. Stay safe out there, people.
Bye-bye.